Good afternoon, guys. It's Working, bringing you a little something different today. I know normally I concentrate on technical analysis on various cryptocurrencies. Today, guys, we're going to be, I want to focus on doing a video for people that are just learning to trade. Now, if you are an experienced trader, this is not something that you're probably going to be interested in. But for those of you that are starting out, this is a basic video on how to read candlesticks on a chart. And if you're just getting into trading, it doesn't matter what market you're in. It doesn't matter if you're into cryptocurrencies, stocks, whatever the market happens to be. Whatever it is, guys, all the candlesticks are the same, and reading the chart, reading the candlesticks are the same throughout all markets. Now, if you're new to trading, that could be a little bit confusing. You've got these mythical looking candles and you're wondering what they mean. But I promise you it's very, very simple. And once you learn how to read them, anybody can do it. You don't need to be an experienced day trader to do this, at least to interpret the chart. So without further ado, guys, let's go ahead and dive into it here. We're looking at, as I said, we've got these green and red looking bars. So what do they mean and how can we interpret them? Well, each in particular bar tells you three things. It tells you the price in a given time period. It tells you the opening price, the closing price, and the variation in price in that time period. Now, each one of these candles, so let me just zoom in here and let's take a few of these as examples. Each one of these candles in this case represents a day. Now you can change that to make each candle represent any given time period. If I come over here, I happen to be looking at TradingView. Depending on which chart software you're using, it might be a little different. On TradingView though, it's up in the upper left-hand corner. You can see all these different time frames, 30 minutes, 1 hour, 4 hours, 1 day. And if I have a drop-down menu, I've got everything from 1 minute all the way out to 12 months. So from 1 minute to a year on this particular one, and on others, you have everything in between. You can select whatever time frame you would like, and whatever time frame you do select, that is what that one candle will represent. In this case, I've selected the daily. So each one of these candles represents 1 day. So how do I read these candles? Well, let's start with this one right here. This red candle right here. First of all, I look at that red candle and I think, okay, where is that as far, what day is that? Well, if I put my cursor over the red candle and I come all the way down, come straight down, I can see that this particular candle is on July 31st, 2018. It shows me there at the bottom. So this candle is the day of July 31st, 2018. So this is the one that we'll start and we'll use as an example. Now this one is red. What about this one over here that's green? What's the difference between the red and the green candle? Well, a green candle basically shows you that price is going up. A red candle shows you price is going down. Now, each one of these candles is in relation to the prior candle. That tells you that will determine what color it is. And it's all based on the opening and the closing price, really the closing price. So in other words, if I take this red candle here, for example, the reason that this candle is red is because this candle here closed at a higher price than this candle did. This candle closed at a lower price than the prior candle. Okay, if I come over here and I look at this big green candle here, and then we have this red candle here, what does that tell me? That tells me that this red candle here closed at a lower price than this green candle closed. Okay, does that make sense? So it's always in reference to the prior candle. So what do these numbers mean, or what do these candles mean, and how do I interpret them? Let me kind of zoom in here on the chart and take a closer look at each one of these candles. And we'll take this one for example. So if I go down here and look at the date, we'll look at July 25th, 2018. That's the date coming all the way down, July 25th, 2018. And you'll notice it has this little wick here and then a little wick down here at the bottom. And then you've got the body of the candle. What that means is you've got three pieces of information that each candle tells you. It tells you the opening price, the closing price, and how and the price fluctuation within that given candle. In this case, within that 1 day period. Okay. Now, if you want to just know the price fluctuation, you go all the way to the top, and that tells you wherever the top is, that tells you how high price went in that given time period. So in this case, on this day of July 25th, 2018. And if I want to know how high it is, I can come up to the top and try to look all the way to the right and try to figure out what price that was. Or a much easier way to do it is you see these things up here in the left-hand side here, they say O, H, L, and C. Those all stand for O is for open, H is for high, L is for low, and C is for closed. So if I put my cursor over any particular candle on our July 25th, 2018 candle, and then I reference those numbers up here, so I'll put my cursor back here, what do those numbers say? That number says the opening price was $8,389.90. Okay, that was the opening price of the candle. That is determined right here. This is called the body of the candle. These are wicks. This is wick, and then the solid portion of the candle is called the body. Okay, the top of this candle here, this was going to be because this is a red candle. The opening price is always going to be at the top, and the closing price is always going to be at the bottom of the body. Now again, I'm referring to the body, not the wicks of the candle, just the body. The body of the candle refers to the opening and closing price. That's what the body of the candle. The wicks refer to how far price has moved up or down from the opening and closing price within that given time frame. So in this case, within one day. So in this particular case, on this July 25th, 2018 candle, we go up here, we can see that the opening price, if we look up here again, the opening price was $8,389.90, and coming down here, the closing price is what? $8,178.40. Now, if I want to know what the high is, I can come over there to, again, look at the left-hand side. We can see the H. It says the high all the way up here, the top of this wick. The high was $8,488.10, and the low, looking at the bottom of this wick, is $8,073.00. So does that make sense? On a red candle, the opening price is on top of the body, the closing price on the bottom of the body, and the wicks just show you how far above and below price went on that given day or any given time period. If this was a 4-hour candle, that would be in 4 hours. Today, again, in this example, these are daily candles. Now, if we look at the candle just prior to that, this big green candle, this is obviously a green candle. This is obviously meaning that this candle ended up closing higher than its prior candle. This was the prior candle here. We know that, once again, the body represents opening and closing prices. But unlike on a red candle, where the opening price is on top and the closing price is on the bottom, a green candle is just the opposite. The opening price is on the bottom and the closing price is on the top. So on this green candle, what do we see? We can see that the opening price was $7,718.90, and the closing price up top was $8,390.90. We can see the high was $8,506.70, and the low, if I look at this little wick down here, was $7,690.00. Why is this a green candle? Because it closed higher than this candle closed and the prior candle closed. We can see the prior candle closed here, the opening price was right here, and it closed up here. Why is this candle red? Well, if we look over here, we see again the green candle closed up top. So where does the red candle following it open? It opens right here. Okay, and where did this red candle close? It closed down here. Okay, so that's why it was red. It closed lower than the closing price of the prior candle. Now remember, guys, this, as I said before, this works on all markets, no matter what it is, it doesn't matter. And it's the same throughout different time frames. So let's go ahead and pick a different time frame. Let's go ahead and zoom into the 1 hour. Now I just hit the 1 hour and we notice everything went flat, okay, on the chart. So what do we have to do? We've got to adjust our chart. So we come over here to the right-hand side, we click our mouse and hold it, and we zoom up. And then we come over here to the chart, we click our mouse and hold it, and we move the chart however we want to. So come up, and zoom out. That way we can kind of zoom in here and look at this new time frame. These candles now represent, as I selected up here, 1 hour. So instead of 1 day, we're looking at 1 hour. But the basics are the same. The green candle, the opening price is up here on the body. The closing price is down here. The red candle, the opening price is up here. The closing price is down here. Same thing, doesn't matter the time period. Now, sometimes we have these very long wicks, like we can see right here. This just means that the price fluctuated greatly. There was a lot of volatility in this 1 hour. Price came all the way down in this one example on September 22nd, 2018. If we look down here, during September 22nd, 2018 at 1800 hours, that is the hour that we're looking at, we can see that the low obviously came down to $6,502.20, and the high was all the way up at $6,740.20. The closing price, we're on a green candle, so it's up top here, is at what? closing price $6,740.20. Excuse me, I said the high. I said the wrong thing below. The closing price is $6,740.20. The high was $6,763.70. So anyway, a little bit of a difference there. But anyway, guys, as I said, the principle is just the same. It doesn't matter what time frame you're looking at. The principle is going to always be the same. Now, generally speaking, day traders tend to look at smaller time frames because things are happening quicker. And they're trying to make a quick, they call them scalp trades or quick day trades. And generally swing traders or long-term holders, they come out and they look at what's the daily charts or the weekly charts and even the monthly charts. And that gives them a much, if I come over here and I look at, whoops, sorry about that. I come over here and I pull out the weekly chart. What can I see? There we go. The weekly chart just helps me identify the larger pattern. If I am an investor, a long-term holder, or even a swing trader, I want to know the long-term pattern. If I zoom out here, guys, I can see on the weekly chart going all the way back to December of last year that this is Bitcoin we happen to be looking at, that it's in a much or a very bear market, they call it, very much in a downtrend overall. However, if I was just to zoom in here and I didn't look at that and I just looked at, let's say, for example, the hourly chart, and I kind of zoomed in here and I was only looking at the hourly chart and I only happened to look at this one little time frame, what would this would look like? It was, on a tear. I was doing very, very well. So these are kind of the ways that people look at bigger picture, smaller picture. But either way, guys, the candlesticks, no matter what time frame you're on, they all read the same. So I'm going to go ahead and wrap it there, guys. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, I certainly would appreciate an upvote, resteam, or a like, depending on where you're viewing this video. I certainly hope you found it helpful. Until next time, guys, please trade safe, take care of yourselves. This is Working, signing out.